Genius, Nikola, Neo stock, all these gold rush stocks that everybody hears from here and there, some Facebook posts, some groups, some Telegram and WeChat and WhatsApp groups that people are a member of. They keep hearing these groups and news and names and they buy into this. In this video, we're gonna tell you that you shouldn't do this. You should stick to traditional, large cap, reliable stocks. And we're gonna tell you why we wanna do this. Stay with us till the end of the video. Hi guys, I hope you're all fine and you've been watching our videos. Thank you very much for your nice comments and that you always hit the like buttons and the subscriptions. It has helped us big time and we've been able to send our messages and our educational material to a lot of people around the world. Thank you very much for that and for your continued support. So I have heard a lot of followers, a lot of people that are in touch with me. They keep sending me messages as soon as some news shows up on some Facebook posts or some community group, social network channel that they're a member of. They just simply say, hey man, there's this stock called Neo, there's this stock called Nikola. Everybody's buying it and it's just going up, it's just skyrocketing. Let's just go and buy. And I keep telling them, you should not really do that. Sometimes these guys end up with a lot of profit, but oftentimes, most of these guys end up with a lot of losses. I've had numerous instances and examples to tell you guys that I've had friends that have lost a lot of money because they just simply went on and bought these nobody knows what stocks. I call these stocks gold rush stocks. Something happens, some news comes out, and most of the time these news are secondhand news, meaning that it has been already circulated in a lot of news outlets, and by the time it gets to you, the impacts, the effects have already showed itself in the stock price. So folks like you and me reading these social network websites or news, we think that this is a great opportunity because everybody else is buying it. But the thing is, a lot of people have already bought it. It has already peaked. It probably has a day or two more potential and opportunity to grow. Nobody knows. But it has already reached a point where the investors who have heard the first-hand news are ready to sell. And what happens is when you buy at the peak, those investors who have already bought at the very, very low, they just pull their money out, they lock in cash, and the stock price falls dramatically. The problem is these stocks, they don't really have a lot of good fundamentals. Fundamentally speaking, these stocks are not that strong. What ends up happening is when those original investors pull their money out, then because the stock doesn't really have the backbone to keep the other investors, the stock price falls dramatically. What I want to tell you is instead of buying into these stocks or hearing from, I don't know, a friend you barely know or the website you barely visit or the research that you really don't do comprehensively about the particular company that you want to buy into, why can't you buy some very reliable large cap stocks like Amazon, like Tesla, like Apple, like these companies that have already shown their performance, have already proven that they are reliable companies. Even if you don't have time to do proper fundamental analysis or technical analysis on the stock, at the very least, you know that somebody else or a lot of other technical analysts, they have already done that. The stock for, I don't know, 3, 4, 5, 6 years, they have systematically shown growth. So this, at least you know that there's a little chance for this company's stock price to go down. Even if some large amount of cash is taken out from the stock and a lot of people sell, there are other people who buy into that stock and are willing to grow and wait, holding that stock in their portfolio. The problem is those stocks are expensive, and I've already recorded a lot of videos teaching you guys that basically you can buy a fraction of a share. So you don't have to buy 1 or 2, I don't know, 10 shares of Amazon. If you don't have enough money, you can hook up with the proper broker and buy a fraction of a particular share. In this case, you will be able to hold, say, a quarter of a share of Amazon, but at least you're pretty sure that Amazon is a solid company, has already proven its performance to you over and over, and your position will not remain in red for a very long time. Even if Amazon has a dip or it goes into a temporary trough, there's a very good chance that it recovers. It has shown that. So I'm gonna ask my friends to show you the graph, and you will see in the last, I don't know, 3-4 years, Amazon has recovered from all the valleys and small drops that it has created. A lot of people think that it's a slick thing to do just to go and hear some news and buy into these very cheap stocks, and probably their entire wealth will be doubled in a few weeks. There are cases that it has happened. I'm pretty sure you have a friend over here and over there who has told you that this is true. Yeah, you know, I have only 10 grand and I bought Neo, or I bought Nikola when he was 32, and right now it's, or a couple of weeks ago he was 64, I sold out, my 10 grand turned into 20 grand. The problem is this something reliable? Is this a reliable growth method by which you can systematically earn money month after month? Can you do this all the time? Would you be relying on this news that shows up every once in a while here and there, and not a lot of those sources could be trustworthy? You have to pick a method where every month you can invest in some large cap, reliable stock and continuously buy into your positions, maybe fractional share, maybe 1 share, maybe 2 shares, and then wait for the position for the stock to grow. Probably you will not double your money in a month or 2, but every month you'll be able to get 2%, 3%, which is great. If you take a look at the technology sector performance in the last 10 years, you'll see that in the last 10 years, the value of one ETF that you bought in 2010 has grown into 5 or 6 times the original value, meaning that if you invested $1,000 in 2010 buying into a technology ETF, in 2020, which is today, you would have $5,000. This is a reliable income that I was talking about. This is much better than being always stressed out, buying into these unknown companies and expect some growth that might or might not happen. So the underlying message of this video is try as much as you can to avoid the gold rush of stocks. Stick to the large cap famous companies that have proven their performance to you month after month and year after year. I hope you like this video. If you have any comments or questions, if you want to challenge what I just said in this video, go ahead, leave a comment there and we will discuss more. See you in the next one.